The dollar bulls are certainly back with a big weekly performance with a critical week this week with the FOMC rate decision eyed among a host of other key events from the UK, Canada, and the Eurozone. Is the dollar going to print new highs for 2024? Guys, Ken Chigbo back with another E8's market fundamental update. Let's jump straight into this. So guys, as expected, we did see a nice strong weekly performance for the greenback. We did say in our previous video, I do believe upside risks are for the greenback. We are going to see that continue to push to the north. And it comes actually after, well, the focus last week was on the CPI data, US inflation, where inflation remains very much sticky. And it takes us into this week where we have the FOMC rate decision where they're largely expected to cut by 25 basis points. However, with that being said, the economy in the United States is still very, very hot. We know that it's warm. You know, consumer spending still pretty solid. The consumer's generally confident. Labor market's still tight. Unemployment rate's low. Wages are still high. Generally speaking, the economy's still running well. Does it warrant all these rate cuts? You know, probably not, because there's still risks if the economy's running warm of inflation creeping up. So I think just before we look at the charts, I think this decision that we get from the FOMC is going to be a hawkish cut in the sense that they cut rates by 25 basis points. They're going to bow down to market pressure again, but they're going to push back on market pricing of 2025, and there'll be a lot less action from them, as they certainly observe when Trump comes into play with his policies, how they are seen as inflationary. So look at the dollar index here, guys. Okay, what we said, see, we staged a bit of a rebound there last week in terms of that candlestick. Bit of reversal doji, validated by that closure above this week. And the way we're shaping up, in my opinion here, in my view, it does look like we're going to go and challenge and print some new highs for 2024. Obviously, we've still got that room to do so. Just to take a look at the calendar, we've got key PMI data from the United States. We've got key retail sales. We're still expecting decent numbers there. I'll be very surprised if we get any slowdown, especially towards the end of the year. I think people still spending, you know, seasonality spending. The economy's still warm anyway. Wages are still high. People are still spending money. I don't see any risks of that coming out, you know, much lower than expected, to be honest. I'd like to see those in line, if not higher. And then, of course, we've got the Fed's preferred measure of inflation, which is core PCE. Inflation expected to remain sticky there at 0.2 from 0.3. I wouldn't be surprised if that comes out higher, to be honest. So if we look at the Dixie here, we need to grind down, the bulls need to grind down this 107 area. If we grind that down there, you can just look on the daily. If we make ourselves comfortable here, we've got room to use this as a platform to go and extend and go and challenge the highs of 2024. Remember, this is like a 2-year high here for the dollar index at 108. I think there's room to do so long as we do get that hawkish cut from the FOMC. And of course, if the dollar's peers underperform as well, which we'll talk about some of those data points in a moment. But we had a bit of a double bottom, which I noted as well. 1-2 support there around that psychological 105, mid 105 region. Look, bam, 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 neckline there. Look, breakout. Had a bit of a wick retest, and then using that as a platform to push to the upside. As I say, we need to grind down 107. Then we've got room to run in towards 108. Plenty of volatility expected for GBP because we do have the Bank of England rate decision. Also we have labour market data, we've got CPIs, we've got PMIs. So it's a key week for the pound. And it comes really, the pound ended last week in the red. We came under some pressure towards the latter stage of the week because on Friday we had a poor GDP reading there on a month-on-month for contraction. Negative GDP, okay, for the month. And obviously the last reading was also negative as well, minus 0.1%. So back-to-back negative readings on a month-to-month basis. By the textbook, arguably is a technical recession, but that's just a monthly reading. Obviously, they really want to be looking at annualized quarter-on-quarter real gauge of health, but near term doesn't look good. Now, it comes because we've seen in the last couple of weeks, we saw some hawkish commentary from Bank of England Governor Bailey, who noted that the market should expect gradualist approach to rate cuts into moving forward, which actually initially had provided pound support, but it's lost that credibility because of the poor GDP number there. Now, we're going to keep an eye on PMI data from the UK, which has been softening a little bit of late. We've seen some slight softening in those recent figures. Claimant count, expecting a worsening in terms of the amount of people claiming unemployment benefits. Unemployment rate, average earnings, first of all, is expected to be higher still at 4.7%, which of course is inflationary. Let's see. All right, we've also got the CPI data expected to remain inflationary. This is one of the reasons why Bank of England governor was hawkish in terms of wanting to keep markets at bay in terms of pricing rate cuts, because they don't want to rush, and then inflation risks, as you can see, is still potentially to the upside. But the thing is with the UK, as I've said before with the Eurozone, They're suffering, in my opinion, with stagflation. Growth is low. We can see that in a slowdown in the data. We saw that in the GDP there, but inflation's still sticky. So that's stagflation. It's a bit of a horrible situation to be in for any economy where we've got low growth and high prices. That's crippling. Okay, so it's kind of a negative in my view. So I still see the risks to the downside for the pound this week versus some of its peers. With the Bank of England rate decision, we're expected to keep unchanged. We're expecting 2 people to call for a cut, but 7 call for unchanged. Let's see if that's any more potentially dovish. Maybe it's a unanimous decision. Might get everyone calling for unchanged. Let's see. But the more dovish we have it in terms of more people, this 2 number maybe being 3, maybe 4 people calling for cuts, that would be obviously more. It'll hit the pound. Okay. Further. Then we've got retail sales. Number expected to be 0.75%, bouncing from that awful number they had last reading. Now, when we look at GU here, it does look vulnerable. Okay, if you look on a weekly, big bearish candlestick there. And it's like we're breaking out of a bit of a bearish flag. So you can see here, channel. Bam, bam, bam. Ran into heavy supply around this sort of 2750 zone. Look. Breakout, retest, rejections, nice selling come into play. Now, we're at key area of support, this sort of 2600 area. If we are able to grind this down, we're going to go and challenge the lows here of 2024. Those are lows of 2024, aren't they, guys? No, they're not the lows of 2024, but these lows of last month, maybe we can go and challenge the lows of 2024 if we sort of move accordingly, respect structure. The fundamentals do support it potentially. If we do get, look, these CPI numbers, the CPI number is quite high. Average earnings is quite high. Potentially that could disappoint to the downside and just help this narrative of maybe Bank of England need to reevaluate and do cut, not gradualistic on a gradual. Let's start that again. Maybe the Bank of England cannot cut with that gradualist approach. Maybe they need to cut more aggressively. Okay, so that'll be thrown into the debate if these numbers do come out softer. Okay, so keep an eye. I do see downside risk anyway for GU this week. Expect some volatility as well from the euro. Okay, we just had last week the ECB rate decision where they cut as expected by 25 basis points. Lagarde was kind of fence sitting in terms of, committing to aggressive rate cuts. Same thing as the Bank of England, really. They've got the trouble of stagflation. Inflation still, the risk of inflation still to the upside, but growth is low. They see downside risk to the economy. We'll keep an eye on these PMIs data, which have been bad. We've had a bad run of manufacturing services PMIs from the Eurozone as a whole, especially from the big heavyweights, Germany and France, 2 largest in the Eurozone. I still see economic downside risks for the Eurozone. Okay, that stagflation scenario is very much crippling, as I say, and I don't think you can win really with stagflation in the sense of higher for longer. No, because the economy is really slowing down with growth. If we've got higher rates, it's still crippling to the economy. All right, I know they're trying to bring down inflation. Now with the euro dollar, negative weeks, we've had this bearish pennant, this bearish range where we're looking for a resumption to the downside, in my opinion, especially if we do get that strong finish for the dollar with everything noted. The daily there, you can see that pennant. We've had a bit of a breakout and a retest, bit of supply heading into at that 105 area. We could just mark up a zone here just so for reference. You can see that there, 105. Okay, so long as this continues to respect structure as well, structure is very much to the downside. We get those rejections there. We should see this. And at least go and feel this wick. Okay, those lows of last month. I'd like to see those challenged personally. But obviously we need to see the supportive data from the dollar. We need to see that hawkish cut from the FOMC. And we need to see these PMIs disappointing. And the euro dollar could very well be going to challenge those lows. When you look, if we just go to the monthly, still screams potential downside for me, in my opinion. I'm personally just given the view of seeing parity in early 2025. Now, over in Asia, we've got the Bank of Japan rate decision. So JPY is in the spotlight, and JPY pairs have been incredibly volatile. You may have noticed over the recent weeks, and this market's trying to suss out, are we going to get a rate hike? You're saying cut. Are we going to get a rate hike from the BOJ? And just according to various source comments, it appears that maybe they're going to push back, hold a little bit, hold till January, early next year. If they do, we've already seen yen weakening already in anticipation that they might not actually hike for this month. So we could get maybe potentially a hawkish hold where they hold, but then they leave the door open to an imminent hike, potentially early next year. It needs to be January. They really need to signal that it's imminent. Otherwise, JPY is going to get hit hard. When you look at dollar yen, obviously you can go and look at other yen pairs. But when I look at dollar yen, it still screams potential upside where we reversed. See this reversal candlestick the week before last? Reversal doji, similar to what you saw there in dollar in Dixie. Dips being bought. Protection of that psychological 150 area, and now we're at 152. We've broken above 152, sorry, into 153. For me, I think this has quite a clean, potentially easy ride. Again, needs to be supported by the macros, but go and challenge this 156 region. That's the next major zone when you look left there. It's the next major zone. We've got room to just float through, break down 154, 155, and then in towards 156, as we saw, similar to what we saw here. See, we've got a bit of resistance there, 154, 50 area. You can see that along that dotted line there as well. But ultimately, if we grind that down and those macros are strong, which it is a very strong macro week, if they are supportive, then we're going to run into 156 and go and challenge those highs. Okay. And when you look at yields, obviously very important to look at yields. Look how elevated yields are in the US, really bounced. Okay, big bounce there in that latest week and signaling further potential upside pressure for US yields. And obviously dollar's going to follow suit there. So yeah, keep an eye on JPY, but I think there could be a disappointment from the BOJ in this decision. And last but not least, Canada. Okay, we got Canadian retail sales and CPI data, which is big because it just comes on the back of the decision where we had the Bank of Canada last week cutting rates by 50 basis points. Generally as expected, CAD did actually strengthen, and the reason being is because their outlook and their language to the statement was quite hawkish actually. They're more so upbeat on general economic outlook, not committing further to aggressive cuts. See, they've done back-to-back cuts there. They've been the most consistent G7 central bank at cutting rates. If we look here with the retail sales numbers expected, softening 0.45% on the core retail sales, 0.4 there on the headline. CPI expected to cool generally across the board, which will backs the case for what the Bank of Canada are doing. The inflation's coming right down towards their targets. And it does leave CAD exposed to some further potential downside, especially if these numbers do disappoint. Markets will ramp up their pricing again for more rate cuts. Okay, when we look at dollar CAD, I've said this for weeks now, haven't I, in these videos, how the risks has been to the upside. We've got that economic and monetary policy divergence between US and Canada. Had a nice little breakout here. It's been beautiful. Okay, we broke heavy supply there at 139. Look, 138.50, remember we spoke about this, 139.50, and now 141. Wicked it. Look on the daily, you can see that nice little breakout of a pennant, and we got room. I want to see how we deal with this 143.50 area. Okay, we may have some potential profit taking there, but there's no reason as to why, given how strong the macros are, you can't zoom through that breakout retest and run into, remember those highs that we were speaking about before of 2020 and 2016. So I still see risks to the upside there for dollar CAD because of that economic and monetary policy divergence. So guys, another huge week. I can't stress that enough. It's massively macro driven. Other than that, have a blessed and amazing week, and I'll catch you on the next video.